So here we go. So today I have actually taken a little bit of different approach than previous few days. If you look at the previous segments which we looked at education, health, education, retail, manufacturing. Um, we essentially talked about how the social distancing is going to affect them. So, in the case of education, there is no fall in demand. People want to be educated. In case of manufacturing also, except for probably very high-end manufacturing, as we talked about that, stuff like very, very expensive garments, or as you called, the stuff which we normally called as premium segment. There may not be much of demand for that, but large part of manufacturing is still in demand. Same is, there is a need for retail, for many goods, whether it is a retail, go to shop, or e-commerce and deliver it at home. So the demand is there, but what is affecting it in a very negative way at this point of time, and everybody is trying to find a way out, is how we maintain the social distancing, right? So tomorrow, for example, something like a miracle happens and there is no COVID virus, all of these demands will immediately come back and people go back to normal. But banking, financial services, and insurance sector, which I am covering today, is little bit unique. It is a sector which services the most part, it services the other businesses. So when the underlying businesses are suffering, BFSI sector, as it is called, is expected to suffer anyway. So it is a sort of secondary suffering. It's while, even in banking and, insurance sector or financial services, there are these concerns, right? That, how do you go to a branch? If you go to a branch, how do you maintain the distance? How many people should be in a bank branch at a point of time? How do you handle this paperwork, right? You have to do a lot of documentation. How do you handle these cash transactions? So there is this concern about social distancing in BFSI sector also. But large part of BFSI segment, the banking, financial services, and insurance is online. It's digital. Large part. But even that section is also affected because the business which it supports is not in a good shape, right? So it is a little bit different, and normally it has been seen that whatever is the GDP growth, if GDP grows at X%, it has been seen that the BFSI sector grows at twice the X, 2X%, right? But if the X becomes zero, BFSI also becomes zero, right? So it cannot grow in isolation. That is one uniqueness about it. And so today's discussion, I will not be touching much on the social distancing part, which we have touched significantly in manufacturing sector, retail sector, and e-commerce and education sector, but really look at what is happening in the sector itself at a fundamental level. But before going into that, sorry, we went to last. So we have covered some of the sectors which we talked about, but we'll proceed. I just taken a snapshot of what is this financial services market all about, right? And many of you will be knowing, but I will like to spend some time discussing this as to what each of these what we have mentioned here does. And based on that, some of them will be having certain level of exposure, both on that physical connect perspective as well as business perspective. So if you look at banks, there are many types of banks in this country, public sector banks, which, SBI, Allahabad Bank and all that. Then this private sector is that, ICICI, Axis Bank, Yes Bank, then foreign banks, regional rural banks. They are specifically unlike the first three category of banks which operate pan India, regional rural banks operate in a particular region. Then cooperative bank, which may be in an urban area or a rural area where some people come together. Cooperative is a term which is used when some people come together, put their money, and they essentially create a, bank which will primarily serve their requirements, right? So cooperative is little different from other banks. In other banks also people come together and give the money to start the bank, but they may not necessarily be the consumer also. They may not necessarily be the customers also. But cooperative banks, which is like very popular in places like Maharashtra, is something which is formed by, in Maharashtra, many cooperative banks have been formed by the sugarcane, cultivators, because they need money. And if they go to the banks, they will be, facing a lot of red tape. There may be time taken. There may be a lot of things they have to keep as collaterals, which will affect the business. So they themselves come together and form a bank, and they themselves become the beneficiary also. Then small finance bank is a concept. Couple of years back it was introduced, where you can keep only a lakh of rupees at max, and pay sort of some of the small transaction costs which you incur, like paying for the mobile bill or paying for some electricity bill and stuff like that. Payments bank, digital bank. Now digital bank is a concept which is not there in India at all. But there are some banks globally who are completely digital. They have no physical existence at all. And if you look at Development Bank of Singapore, DBS Bank, they are largely digital, though they have some physical presence. And DBS Bank has come to India, and over a period of time, they want to become a digital bank also. So if you go back and see, these types of banks, if you are a completely digital bank, which nobody is there, your problem of physical touch is not there at all. Now, if you look among the other banks, public sector banks, private sector, and foreign banks, among them, foreign banks and private sector banks are largely automated today. Large part, they are mostly operating in the urban areas, and large part of their customers are actually operating online. You and me would have, largely forgotten when we have gone to bank branch a long time back, when we have gone to the bank branch last. But if you look at public sector banks, especially they also have to have 40% of their branches and activities in the rural areas. Lot of it is physical. For example, State Bank has 12,000 branches, but if you look at the HDFC Bank, which is the largest private sector bank, you may have 2,000 branches, right? And the other banks, which is payment bank, small finance bank, rural cooperative bank, and all, they are heavily into into physical world. Most of their customers don't know how to operate a digital banking channel. And second thing is, even among the first second and third category which I mentioned, there is a large number of people who are these older people, as you may say, who actually don't know how to operate the bank digitally, right? So one part, as we said, that banks will obviously be facing challenges from the business perspective, because bank's job is to essentially take money from somebody and give money to somebody. And if there is no business transaction, they will suffer. But some of these banks will also suffer from the physical, social distancing perspective. Some of them may be little bit or significantly insulated from that, right? So that is primarily the foreign banks and the private sector banks. Then let's look at the financial institutions, which we, again here, NBFC, non-banking financial institutions. Sorry, it will not be financial institution, non-banking financial companies, microcredit organization, mutual fund, pension fund. So like mutual fund, we know that, we give money, and on our behalf, they, invest money into stocks or equity, right? Now, mutual fund is almost completely online now. But since the asset they're investing today, whether they are taking a position on equity of companies or expecting them to see an appreciation, or they are buying debts, as they call the loans, and expecting their appreciation, that business has gone down, because the equity market is sort of struggling, and loan market is struggling even worse because people are not even able to pay back the loans, the interest of the loans they have taken. So mutual funds are suffering again. NBFCs have a very peculiar situation, and I will put NBFCs and microcredit in the similar bracket. So the way they operate is that non-banking financial companies give money to the people who will not get money from the traditional banks. Okay, so if you are, for example, if somebody is stays in a rural area, and that person is a wholesaler or a retailer for say fertilizer, or somebody is into automobile business, it is very difficult for them to go and get a bank loan. One is, of course, they will be far away from the city, and going and coming will be an issue. Second is where far away from a place where the bank branch is situated, and typically it will be a city who will decide on the loans they are asking for. And then the banks will have a lot of, since banks are already dealing with very very credible customers, like large corporations, or high net worth individuals, or people who are easily traced, like you and me. We have our all sorts of documents, we have our Aadhaar card, we have our tax history. So they will be very reluctant to give money to somebody who is running as a grocery store, or a retail outlet for fertilizers or seeds in a rural India. So that is where the non-banking financial companies give them money, and they take a higher rate of interest compared to what bank loans. But given the fact that the money comes in quickly with less paperwork, people are very happy about it, and they have a huge business. Shriram Finance is the largest non-banking company in the country. Then L&T Finance is another NBFC. And then you have this microcredit organization, which essentially give money to self-help groups, group of people in rural, typically rural India, but many times in urban India also, come together. And they say that, see, I don't have any asset to show, or I cannot give a guarantee, but I will actually bring in 5 other people, and together we'll take a loan. And 10 of us will take a loan, and we'll ensure that everybody pays back the interest as it is due. Because if one of the persons don't pay the interest, then all other 9 will also get a bad name, and they will not get a loan again. So together they create a collective credibility. And the way it works is that even one person fails to pay back the loan, the other person will be paying back on their behalf, right? Just one second. Sorry, it's went down. I'm just seeing whether I have put the recording on. Looks like I have not. Oh no, recording is on. Okay. I'm not seeing that particular this thing. Okay. So pension funds are the, this PPF, Public Provident Fund, is one which puts money again on, certain bonds or certain debt instruments, or, equity, and then they get return. Insurance, of course, we know that, the life insurance and non-life. So life is understandable. Non-life is, of course, we take from fire, we take for cars, we take for house, and, there are so many other types. All sorts of insurance is there. Now, if I look at this whole thing today, if you take a snapshot, apart from insurance, where because insurance will typically flourish when things are really there is a lot of uncertainty today. People may think that if the COVID continues for years, I may have a problem tomorrow, so better for me to go for life insurance, or my business may be down, so let me take insurance for my business, right? Or there is this insurance, may not be so much for car insurance and all, which probably people will be takes for the car it meets with accident. But if somebody has a factory, they will take insurance against all sorts of business risk. If somebody is running aviation business, they may feel that tomorrow I may not be able to fly, but I have to pay back because the aviation the planes are taken on lease from people who manufacture them. It's not usually bought. So, the lease you have to always pay, but, you probably are not getting any passengers. Right now, that is the situation. So can I take insurance for that when my business goes down? So life insurance and a significant part of non-life insurance, especially which is connected to business, maybe there will be more people who will be looking for, that sort of signing up very quickly. But if you look at everything else, okay, whether it is a banking or financial institution, within that NBFCs, microcredit, mutual fund, pension fund, everywhere they, they are seeing a very poor outlook. Now, let me just summarize, what is it that, a bank or a financial institution does? Insurance also does, but primarily these two. The model of these two is that they take money from some people. So I deposit money in bank, you deposit money in bank, and we get some interest. If we are doing a current account, we get, say, now 3%. If we do a fixed deposit, maybe we get something more, 5% and all that. And then these banks and financial institutions give loan to somebody else, okay, and then they get an interest which is higher than the interest they are paying. And this this is the difference with which the primarily the financial institutions and banks are making money. So they probably pay me 3%, give it to somebody at 6%, and then 3% is the margin. Now this 3% will immediately not become a margin, because I might give money to the bank may not find somebody to give the money, so obviously there may be some delay in giving away, because my small amount may not be relevant. You have to take from a lot of people to give a big loan. Then you will have some issues in terms of, I anyway give the money to the bank, and bank will return to me, but bank is giving loan to somebody, and then that person may default. So there probably, bad loans, as they call, or non-performing assets. You may find a lot of businesses will be struggling, because of which they may not be able to pay the interest of 6%. By some way they might give back the loan they have taken, but interest they will struggle, and at some point, there will be some sort of compromise. Okay, give back the money, at least the original whatever I paid. And then you will have many other things. Bank will have to run their own organizations and all of that. So that 3% may not be straight away its profit, but essentially this is the model. Now, what has happened today is that whoever has taken money, okay, from the banks, whether I have taken money, or you have taken money, or a company has taken money, or a self-help group has taken money, or a small dealer has taken money, stockist has taken money, everybody is struggling. And government also has said that, you should not be pushing very hard for the people to pay back the money. So if you look at, government has said whoever has taken a loan, home loan, for example, for 3 months, you need not pay the equal monthly installment, EMI. But previously, if you look at, if you don't pay EMI for 3 months, you will be, chased by folks at home, and the money will be recovered from you, right? If you can't pay EMI for a couple of months, the asset will be seized and it will be put on auction, and they will take back whatever, they will say bad loan, and that's it. But now, government has told, so every bank has given an opportunity to every customer that you can defer your loans for, the interest for 3 months, right? So whatever is that, in money they were getting from me, they would have borrowed from somebody to give me the loan, right? And so they are obligated to, government has not said the bank should stop paying money on the deposits they have taken. So now they will be under a lot of pressure so that becomes a loss for them. On the top of that, I may still be giving money, but there may be business which is totally collapsed, right? So they will just say, "Was I cannot give it. I am a bankrupt company," right? So, so self-help groups, where I was talking to a friend of mine who runs a self-help group. He said that forget taking money. We are not able to go even to the customer to collect the monthly installment, because there is a lockdown, right? So a lot of these organizations collect interest, especially the microcredit organizations and all. The money will not come by a check, or it will not come by a digital channel. And even for check, you have to actually go, the shopkeeper will not be sending it through to the bank by some, transaction online. You have to really go to the shopkeeper and take a check every month, first of the month, and then go and deposit. But all this is fallen through. So the financial institutions are in big trouble today. One side, they are not able to collect back their interest or their principals, but on the other side, people like us, and more than that, the larger people who gives loan to the banks, the government gives it, the RBI puts a lot of money, pension funds give, mutual funds, wherever they have free cash, they put it with this banks. So the banks under a lot of pressure to how to bridge the gap. So that is the fundamental issue. And as the economic condition continues to be bad, if the economy doesn't take up, and the ability of the people to pay back interest today, tomorrow, and the ability to pay back the principal amount, day after tomorrow, this sector is going to suffer. That is where government is thinking that, recapitalize the banks, which means the banks will now suddenly have their own basic capital. The equity capital is getting eaten up because they have not enough, income happening. So then they have to be given some additional equity. That is called refinancing of the bank. So all these sort of things are expected to happen. So I spent a lot of time giving this perspective. I will just move on, and this is something which I've already spoken. On the right side, very similar graph I have presented a few days back on the manufacturing sector. It is for banking sector now. The sentiment is down. Everybody's thinking of where is the financial impact? How do I get back my money? What will happen to employees? And on the left side, I have taken some of these, other concerns, which may not be the primary concern of banks today, banks and financial institutions today, but definitely the secondary concern is the touch. This whole fear of having these currency notes. Currency notes, it is not clear whether, they are saying don't go to ATM, take the money out, because somebody might have come before you, he might have touched, and he might be a carrier, right? So then the cash you take, we are trying to move to cashless as much as possible, right? Then interest repayment. So retail customers, retail means the people who have taken bank loans for house and cars, for example, or taken for white goods or brown goods. White goods means fridge, refrigerator, and stuff like that. It is expected around 15% will not be able to pay back at all. Now you can say that I will take back your assets, so they might take back thousands of cars, but then what will happen to the car? Who is going to buy the car? Because they have to ultimately sell the car. The banks have no business sitting on 1,000 cars. They have to also find a buyer, but the buyers are missing because nobody wants to spend, right? So today, even if yesterday you might have thought of buying a luxury car for say 30 lakhs. Today, even if somebody says that car is 6 months old and I'll give it for 10 lakhs, you and me will stop, because we'll say, boss, let me keep cash. The car can wait, but money I don't want to let go, right? So then the asset quality. So every loan, everything is given on basis of a asset, which is called collateral. Now somebody might have taken loan against their asset, which may be a factory, right? So and the production that will happen. So you say I made 100 crores revenue every year, I make 20 crore profit, so I have taken 80 crore loans, expecting that I will be making 20 crores every year. But now if the factory is not running, then I am not making my 20 crores. And of course, I am in deep trouble. So will be the lenders, because their asset against which they have given the loan is now turned back. Branch operations he talked about. Branch operations, especially rural India, is very, very physical, and a lot of people end up. It's a very high contact zone, and then whatever you do, older non-tech savvy customers will struggle. Now you previously you said that we'll send them send people home so that they can do transactions. Now you cannot do that also, because coming to home is probably more threatening than going to the branch. So home banking is not a solution, right? But then again, I say that touch and all is probably the second consideration, unlike the other segments. It may be the secondary consideration. Primary consideration for them is underlying business environment has collapsed. So what has the government done so far? As they have given this deferment of EMIs for 3 months, interest on working capital. So all companies take capital, some money to run your business, day-to-day business. That is called working capital, and that is the money you keep in current, the current assets and current liability. Something you have and something you have to pay every day. Businesses will typically take it from the bank as a short-term loans. Now that interest has again been deferred for 3 months. Banks need not have to pay dividend for some time, especially the public sector banks have been told that they should not be paying dividends. And I think other banks will also follow. Cash reserve ratio is there are certain, every bank based on the amount of business, they have to keep a certain percentage of the asset in form of cash. So if suddenly people come back to the bank tomorrow and say, I want to withdraw, a lot of people come and start withdrawing cash, they should not suddenly become, come in some trouble that there is no money to fulfill whatever they ask for. So that has been reduced. So banks have a little more cash to give, compared to what it had. Bankruptcy code, which was like, if you don't pay back, your interest for, I think, 3 months or so, it can be taken to the bankruptcy mode, which means you can file a case and they will be taken up for bankruptcy. Means the company will be sort of closed down and assets will be sold. That has been suspended, so that for next 6 months people are not taken to court by people who are not getting money. Now this is good for the person who was not able to pay, but look at the other side, the person who was expecting that payment, right? So they are suddenly dried of cash. So everybody is getting cash from somewhere to spend somewhere. Now the guy upstream is suddenly protected by bankruptcy code and saying that I will not pay you, is making the life of the guy downstream who needs the cash to run his or her operations, right? So this also has some cascading effect. Fiscal deficit is, I'll not get into detail, but this is essentially the expenditure and income spread in the budget, and there is, if it increase, your inflation goes up. But this is something essentially, as you say, the printing more notes in the market. So it has immediate liquidity situation, because people will have cash in their hand but over a period of time increase the price of the commodities, everything around us. Then the GST, there is a thought that it will be deferred by 6 months. So, people will essentially get whatever they have to pay for next 6 months as a sort of a short-term loan in their hands. And then a bunch of things have been done on the government, which, we are pushing money to people's account. We are giving them food and fuel. Whoever is working, 22 lakhs frontline workers for health has been given insurance of 50 lakhs. Some amount of money is being given to people who have been working as not daily wage earners, but people who are out of job because they were contract laborers. So that's it for now in some reading. So I just will summarize what I said is the BFSI sector is a sector which typically, or which is entirely dependent on the underlying business activity. Normally, it has been seen that if the overall growth of the economy is X%, BFSI sector grows by 2X%. But if it becomes zero in the economy, this sector also collapses. Unlike the other sector where the physical distancing is the biggest concern, BFSI sector, because large part of the financial sector operates digitally, right? For example, the banks, businesses, if you look at, you have retail banking, which is also large part is digital. Like we all give money online, EMI is deducted. Then you have investment banking, you have corporate banking. A lot of, there hardly any, the money is getting transferred over channels. But what is the issue out here is that, physical distancing is an issue, definitely at the branch level. And as we move from city and more prosperous customers to non-city and less prosperous customer, or less tech-savvy customers, or older customers who need physical banking and stuff like that, the distancing is an issue. But more than that, right now the whole BFSI sector is suffering from the fact that nobody is able to one side, people who have taken loans the business are turning bad. The government has given directive that don't take back money from people in terms of EMI. If they want to, the businesses are failing to give back their money because their business condition is very bad, and they want to keep the money to do things like paying salary rather than giving interest. You have that is making the banks bleed, because they have to fulfill their obligations for the money they have borrowed, but they are not getting the interest. Large amount of the lending is going to be under pressure. In retail, it is expected 15% will be turning bad loans, which is a huge amount. And even if they, the asset against which they have given loans, many of them has turned bad. I might have taken a loan of X with my house being valued at Y, but today the house value has become Y by 2, because, there is no buyer for house also, So even if the bank has given me X and I falter tomorrow and they try to take my house and as a collateral and try to sell, they will not even get Y. They will get Y by 2, right? So asset quality has become very weak, and that's even if people are ready to pay back, whether they have capacity or not, a large part of the collection also has stopped, because the physical distance and the lockdown and everything is affected. So this is a segment in deep trouble. Government is trying to do a lot of intervention, because if the financial services sector collapse, that is the fountainhead of all collapse. So one side, government is trying to create liquidity in the system by giving people money, giving them some reassurance, giving them food so that they don't have to fall back on, money to be taken out from their, bank accounts, some fuel. It is giving some amount of wages. At the same time, a series of steps are being taken primarily by the RBI to loosen lot of restrictions, so the banks work under much less restriction and have more money to give to people who need. Otherwise the banks will go back and says, we are in bad shape, will not give any new loan. And look at a small MSME sector, medium and small scale enterprise, who probably have to start back their operation after the lockdown is over, but they need 2 lakhs. They go to bank and bank will say, no, I'll not give you already owe me 20 lakhs. Unless you pay back, I'll not give. Now what will happen is that 20 lakhs is also gone, because this guy will not be able to start business. Business is also gone. So a lot of these things have been given, refinancing of banks is happening. Going forward, I think they will be given, these things that, your bad loan provisions will be deferred. Whatever the trouble loans, I will give you more time. Even if you carry it in your balance sheet, I will give you more time. So these are sort of things will happen. So this is a summary. I will probably stop here and
I have one question.
Just one sec. So tomorrow I'll be doing the IT and ITS, information technology, and the IT enabled services. There is a BPO. That is another big sector. Yeah.